Finally, Zomato has announced its IPO date. The IPO window will be between 14 to 16 July 2021 and the IPO size is Rs 9,375 crore, which is the highest in the last 16 months after SBI Card IPO in March 2020. At the price band of Rs 76, Zomato would be valued at Rs 60,000 crore. So it is going to be a big IPO and the first tech unicorn to go for public listing. I'm sure there is a lot of curiosity about this IPO and whether it is worth applying or not. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. If you are following my channel, then you would know that I already created an in-depth video on Zomato business where I explain the business model of the company, its key strength, competitors and financials, including the unit economics. That is how much money it spent to acquire a single customer. So in this video, I will quickly touch base upon the business of the company and its financials. Then I will look at the IPO details and then I will discuss the most important aspect, that is valuation. Finally, I will give you my verdict on the IPO and tell if I am going to apply for this IPO or not. Alright, let's get started. So Zomato is involved in two business segments, B2B, that is business to business, and B2C, that is business to consumer. If you look at the B2C segment, Zomato has two major offerings. First is food delivery, where customer can order the food online using Zomato platform. And second is dining out, that provides a platform to customer to search any restaurant in the city, read and write reviews about their experience, explore the photos as well as menu card, book a table and make payment while dining out at the restaurant. Zomato is the biggest player in India in food delivery business, which is growing at a very fast rate. As of December 20, Zomato had 1.61 lakh delivery partners and 1.31 lakh active restaurant partners for FY20. Now, how does Zomato earn money from food delivery? So Zomato charges a commission to restaurant partners on food delivery. It also earns from the paid promotion of restaurants on the app. Then it also has B2B segment that includes your Hyperpure that supplies high quality ingredients and kitchen products to the restaurant partners. Then it has a segment of Zomato Pro, which is a loyalty program for food delivery and dining out. Basically, Zomato Pro is an exclusively paid membership program that provides flat discount to the customer at selected restaurants that have partnered with Zomato for Pro membership. For example, if you become a Pro member of Zomato for let's say Rs 200 for 3 months, in that you will get a lot of discount on restaurants that are part of Zomato Pro membership program. So this creates a steady revenue stream for the company. As of December 2020, Zomato has 1.4 million active Pro customers and around 25,350 Pro restaurant partners. If you look at the future growth prospect, there is certainly a rise in online food delivery business. Due to an increasing busy lifestyle, people now prefer to order food online. So far, this adoption is mainly in the metro cities of India. But there is a huge scope of growth for online food delivery in non-metro cities and small towns of the country. One of the reasons is convenience. Today, the majority of people have a smartphone and a decent internet connection that makes it super easy to order food online. But when there's a huge market, there's a strong competition. Zomato has competition from different segments. For example, Swiggy is a competition to Zomato. Then there are a lot of cloud kitchen platforms that create competition for Zomato. Then majority of QSR chains like your Domino's, McD, etc. have their own network of delivery. Finally, the big threat is from the Amazon that has already started its online food delivery operation from Bangalore. In the future, I expect that the food delivery segment would see more intense competition. If you look at the revenues, Zomato revenues have doubled between 2018 and 19 from 1,397 crore to Rs 2,742 crore. But it fell down to 2,182 crore in 21. It was mainly due to COVID lockdown. Although the online food delivery was operational for a considerable period of time, but still the FY21 revenues were lower than FY20. If you look at the profits, Zomato is consistently in loss for the last 3 years. In March 2019, the loss was Rs 1,010 crore. Then loss widened to Rs 2,385 crore next year. Then loss reduced to to rupees 814 crore in FY21. The reason for loss is mainly due to the fact that Zomato is growing quickly and is spending a lot of money on marketing and advertising. Also, it is giving a lot of discount to attract new customers. Although Zomato has significantly reduced its advertising and promotional cost, it is still at a loss. Company's cash and cash equivalent situation for FY21 stood at 306 crore. Although the company has some investment of around 2,205 crore and bank balance of around 597 crore and other financial asset of rupees 629 crore, but the current cash and cash equivalent is only rupees 306 crore. If you look at the IPO details, the Zomato IPO window is 14 to 16 July 21. IPO price band is between 72 rupees to 76 rupee. The total market lot is of 195 share at a face value of rupees 1. So the minimum investment amount is rupees 14,820 and the maximum lot for retail investor is 13. The issue size is of rupees 9,375 crore, out of which there is a fresh equity of rupees 9,000 crore and remaining 375 crore is offer for sale where Info Edge is diluting its shareholding. Rupees 9,000 crore raised from the IPO would be used for organic and inorganic growth including the acquisition, and remaining would be used for general corporate expenses. Now the most important part, that is the valuation analysis. At a price band of rupees 76, Zomato would be valued at $8 billion, that is around 60,000 crore. So that would make Zomato a large cap company. Now before we even discuss about the valuation are justified or not, let me show you how Zomato valuations have skyrocketed over the past few years. In February 19, Zomato was valued at $2 billion. Then in January 20, it was valued at $3 billion. Then in September 20, its valuation jumped to $3.3 billion. Then in December 20, the valuation became $3.9 billion. Then in February 21, the valuation reached to $5.4 billion. Now in July 21, at the time of IPO, company is valued at $8 billion. That's a 48% increase in valuation as compared to 4 months ago. Now normally when we check the valuation of the company, it is compared to the earnings. But Zomato is loss-making company, that is, its earnings are negative. So the P model would not work with Zomato. Now there are some other models like your price to sales ratio. And if you look at the price to sales ratio of Zomato, its latest price to sales ratio is 28 times. But again, we do not have any listed company in the food online space in India to compare the numbers. Again, there are some listed companies in US like your DoorDash, but we cannot compare the US market and India market as US market is quite mature and Indian market is still in its nascent stage. But now the question is whether rupees 60,000 crore valuation justified for a loss-making company? It is difficult for me to digest. Maybe I am a bit old-fashioned, or I am not a high-risk taker, or probably I don't know how to evaluate the valuation of a loss-making company. So there is no doubt that the online food delivery market has a great potential. And the most common argument is that in technology business, you are initially at a loss and then you acquire customer and then you become profitable. I take that point. The idea is similar in the online food business. They want more and more people to start ordering online food, and once they acquire enough customers, slowly they will reduce the discount and increase their commission from restaurant. And of course, there's a race to become the #1 player in online food delivery, and Zomato is ahead of Swiggy. But the biggest risk for Zomato is not Swiggy. The biggest risk is players like Amazon. Amazon has already entered into the online food delivery business. Now think about this. As a user, when you order the food from your favorite restaurant, does it really bother if it is from Zomato or Swiggy or Amazon? What if tomorrow Reliance also get into the business and start giving you the same food at lower price? Won't you switch? Well, I would. So I don't see a huge economic moat with Zomato that nobody can replace it. What if tomorrow your favorite restaurant delists themselves from Zomato and move to another platform? Obviously, you would also move to another platform. In fact, if you look at the grey market premium of Zomato, it is around 15 to 20%, which is not that high. Now, why is the grey market premium not 50% or 100%? I mean, there is certainly a hype and people will apply for Zomato IPO as everyone wants a slice in that online food market. But for me, a valuation of 60,000 crore for a loss-making company is not easy to digest. On top of that, like I said, I don't see a very thick economic moat with Zomato. Of course, they have the brand name and strong distribution network. But this online food sector would see more intense competition with giants like Amazon entering into it. And Zomato would have to continue burning cash to sustain its position. So I don't see Zomato making profit in the near future. It has been a great investment for companies like InfoEdge that invested in Zomato at a very early stage. In fact, InfoEdge has shown tremendous confidence in the company. It holds around 9,400 crore worth of Zomato share at rupees 76 price band, and it is only selling shares worth rupees 375 crore. But today, Zomato is already a large cap with the IPO valuation of rupees 60,000 crore, and I don't see Zomato growing 10 times in the next 10 years to become a 6 lakh crore company. So I would give it a miss. Maybe in the future, if there's a correction in the share price or I see some sign of profitability, then I might consider Zomato. But for now, it's a miss from my side. Having said this, online food delivery is a very exciting sector and certainly worth keeping an eye. So what is your take on the IPO? Are you going to apply for it? Do let me know in the comments.